Between January 2020 and December 2025, China imported 54 million metric tons of copper. That's more copper than the United States, Europe, and Japan combined consumed in the same period. And while financial media called it infrastructure development, something else was happening. Your electricity bill went from $137 month to $192 month. That's $660 more per year. Not because you used more power, because China cornered the global copper market, and copper is the backbone of every electrical system. But here's what nobody's telling you. Copper is just one piece. While importing 54 million tons of copper, China also imported 85% of global lithium, 70% of global cobalt, 65% of global nickel, and built strategic stockpiles of rare earths, antimony, gallium, and germanium. This isn't buying for manufacturing. China's industrial output has been flat or declining since 2022. This is systematic conversion of dollar reserves into every physical resource that powers modern civilization. And it's following a pattern that has transferred wealth from empires to rising powers 3 times in the last 150 years. Let me show you what's actually happening. Here's what most people are missing. China accumulated $4 trillion in dollar reserves over 3 decades of running trade surpluses with the West. $4 trillion in a currency that's being printed into weakness. So they made a choice. Hold paper that loses value, or convert it into physical assets with intrinsic industrial value. They chose assets, and they're executing that conversion at scale. Every ton of copper China buys requires converting dollars into physical metal. Every kilogram of lithium, cobalt, nickel, dollars out, resources in. This is one of the largest wealth transfers in human history happening in plain sight. But it's not just about China getting richer, it's about you getting poorer. Because when one nation controls the resources everyone else needs, they control prices. Your copper, electricity bill $660 a year. Their lithium, your EV battery $8,000. Their cobalt, your phone $400. Their rare earths, your laptop $1,700. This is wealth extraction through resource monopoly, and it's accelerating. Let me show you the scale. China isn't just stockpiling copper. They're systematically securing energy transition materials. Lithium for batteries, cobalt for battery stability, nickel for battery cathodes, rare earths for EV motors and wind turbines, infrastructure metals, copper for electrical grids, steel and aluminum for construction, technology materials, gallium for semiconductors, germanium for fiber optics, rare earths for electronics, defense materials, antimony for ammunition, tungsten for armor-piercing rounds, rare earths for missile guidance. This isn't about China being smart. This is about you paying permanently higher prices for the rest of your working life. While Western nations count wealth in dollars and stocks, China is counting wealth in tons of copper and kilograms of lithium. Paper versus physical. Physical is winning. Let me show you this disconnect in real time. Silver prices went from 24 ounce in January 2024 to 76 ounce by December 2025. 217% increase in 24 months. Why? Chinese investors figured out something Western markets don't discuss. In paper silver markets, futures and ETFs, there could be more than 100 contracts claiming ownership for every physical ounce that actually exists. Fractional reserve banking applied to metals. Physical silver demand in China exploded so fast that domestic prices trade 10 to 15% above global spot prices. Silver investment funds in China are so oversubscribed that investors pay 60% premiums over net asset value. They're paying $160 for every $100 of actual silver. When paper claims break, physical owners don't just win, they dictate price. This is playing out across every material where supply is concentrating in Chinese hands. Paper claims multiplying, physical supply concentrating. When that gap collapses, paper holders get destroyed. This has happened before, and here's the uncomfortable part. Once Stage 4 starts, there is no policy lever that stops it. Let me show you the pattern. Stage 1. Silent accumulation. Buy while cheap and abundant. No headlines, just systematic purchasing. China did this 2010-2020 across all materials. Stage 2. Price suppression. Keep buying even as stockpiles grow. Maintain illusion of abundant supply. China did this 2020-2024 while manufacturing output declined. Stage 3. The pivot export restrictions, licensing requirements, price explosions. December 2024, China banned rare earth gallium germanium exports. January 2025, State Trading Management for Critical Minerals. Stage 4, the transfer wealth flows from consumers in dependent nations to suppliers in controlling nations. Executing right now through your electricity bill, car costs, phone prices, medical equipment. Let me prove this pattern is real. October 1973. Arab nations controlled 60% of global oil. Then they cut exports to the U.S. during the Yom Kippur War. Oil quadrupled in 6 months. Average household gasoline spending went from $300 a year to $1,200 a year. That's $900 more, equivalent to $6,200 today. Inflation hit 11%. Recession followed. Everyone said, never again. We'll achieve energy independence. Took 40 years. The shale revolution didn't hit until 2015. Same pattern playing out now with industrial metals. Except this time it's not just one resource. It's copper, lithium, cobalt, nickel, rare earths, antimony, gallium, germanium, everything. And the timeline to rebuild domestic capacity? 10-15 years minimum. Now here's where this gets systemic. This isn't just about commodity prices. This is about the dollar itself. Every ton of copper, kilogram of lithium, ounce of silver China buys, that's dollars being converted out of currency and into assets. That's constant downward pressure on dollar demand. But that's just one factor. The dollar is facing multiple structural headwinds simultaneously. Factor 1. China converting $4 trillion reserves into physical resources. Factor 2. China building alternative payment systems. 42 currency swap agreements. $4 trillion UN capacity. CIPs, with 3,400 participants bypassing dollar settlements. Factor 3. Japan forced to sell U.S. treasuries. Japan holds over $1 trillion in U.S. debt but faces 250% debt to GDP. They're hiking rates to defend the yen. To fund that without exploding debt costs, they're selling treasuries. Factor 4. Yen carry trade unwinding. For a decade, investors borrowed yen at 0%, converted to dollars, bought U.S. assets. As Japanese rates rise and yen strengthens, that trade reverses. Money flows out of U.S. assets. These aren't isolated events. They're reinforcing dynamics that compound each other. The dollar is entering a multi-year structural down cycle. Not a temporary dip. A 5 to 7 year trend driven by forces that don't reverse quickly. And we're only in year 1. Map this to right now. Stage 1 and 2, complete. China accumulated resources 2010-2024 while prices were suppressed. Stage 3, executing. Export restrictions expanding across all critical materials. December 2024, rare earths, gallium, germanium banned. January 2025, State Trading Management for Minerals. More restrictions coming. Stage 4, in progress. You're feeling it. Electricity, 660-year EVs, $8,000 battery replacement cars, $3,200 in copper materials, phones, $400 laptops, $700 medical equipment, doubling in cost, and the dollar is weakening as China converts reserves to assets, Japan sells, treasuries, carry trades unwind, alternative payment systems, activate. This isn't one crisis. This is systematic restructuring of global economic power. So what does this mean for you? If you're holding wealth primarily in dollars or dollar-denominated assets, the assumptions that worked for 50 years might not work for the next 50. Here's what's changing. Paper currencies are depreciating relative to physical resources. The dollar lost 8% against major currencies in 2024. It's on track to lose more in 2025-2026. Physical assets are appreciating relative to currencies. Copper, plus 85% since 2020. Silver, plus 117% since 2024. Gold, central banks buying at record rates. Strategic materials are becoming monetary in function. They're not just industrial inputs. They're stores of value that can't be printed. The rules are changing. Traditional safe havens, bonds, cash, may not perform as expected. Physical resources and productive assets are gaining importance. This is a generational shift in how wealth is stored and how economic power is measured. First, understand this is math, not politics. When one nation controls 50% of copper refining, 85% of lithium processing, 70% of cobalt, 87% of rare earth processing, they control prices. Second, adjust for permanently higher costs. Electricity, transportation, food, technology, everything is repricing. Your $137 electricity bill isn't coming back. Budget for $190, $220 month permanently. Third, recognize paper versus physical. If you're holding wealth in currency, bonds, or paper claims on assets, you're on the wrong side of the trade. Physical assets, real estate, commodities, productive businesses, maintain value when currencies debase. Fourth, understand the timeline. Even if the U.S. started rebuilding refining capacity tomorrow, it's 10-15 years before meaningful supply. You'll pay premium prices for a decade. Fifth, this is systematic. China isn't stopping at copper or lithium. They're executing this across every critical material. Stage 4, the wealth transfer, is in progress. The question: are you positioned on the side that loses or the side that wins? Look at your electricity bill. That $660 increase happened because China imported 54 million tons of copper while building strategic stockpiles. Look at your car payment, your phone bill, your grocery costs. Everything is repricing because one nation cornered the materials everyone else needs. This isn't temporary inflation. This is stage 4 of a pattern that has transferred wealth from empires to rising powers throughout history. And it's executing right now. Through your bills, through your costs, through your purchasing power quietly eroding. Next video, I'm showing you the exact foods that are about to reprice. China doesn't just control industrial metals. They control agricultural processing, fertilizer production, and food supply chains. Your grocery bill is about to spike another 35%. And I'm going to show you which foods get hit first when prices jump and why American farmers can't stop it. Subscribe right now. Because this series connects the dots between China's resource strategy, dollar dynamics, and your personal finances. Not geopolitics, not theory. Your money, your bills, your wealth. Being transferred right now to whoever controls physical resources. The pattern is clear, the mechanism is running, and stage 4 is executing. Welcome to Geopolitics of Money.